Jenny Horn's joining the show here to talk some Macy's. Jenny, of course, a contributor across the TD Ameritrade Network. Good morning to you, Jenny. Hey, this has basically been the exact opposite kind of story than Zoom. This is one that's been struggling, and then you throw the pandemic situation on top of it, and it's really made it a bigger struggle for this company.
Yeah, so similar to its department store peers, Macy's is getting absolutely crushed. They're still down about 55% this year. They are up slightly today, but not able to erase these yearly gains because, they haven't really done much to find their kind of step where they can improve here. So I saw a really interesting statistic about their earnings today. If they actually report in line with what analysts are expecting, their earnings will have decreased 732% year over year. So that hurts. That's obviously not great for them. And they actually also said that lower operating hours at the stores that have reopened, they expect will weigh on their top line. They also said they expect decreased tourism to affect their earnings negatively. So not great things for Macy's. However, they are trying here. So they did say in their last earnings call that the company's reopened stores are actually doing better than they expected. They also said digital sales remained really strong at the stores that have reopened. They're also doing different things such as, now offering curbside pickup. They're trimming their operating costs. They're also making their stores more technology savvy. So, these are all, of course, headwinds. However, the biggest problem I see with Macy's and just department stores in general is that they really lack having a niche. So similar to say, like, we've seen this home improvement push. We see this positively impacting a Home Depot, a Lowe's. We see people purchasing more furniture for their homes because we're all stuck in our homes. This has been reflected in, say, Wayfair, RH, all these different retailers that have furniture. And then we see direct to consumer really, really helping a Nike and Under Armour. And then, of course, consumers that want to get their goods as fast and as quickly as possible, that's benefited Amazon, Walmart, Target. Department stores kind of lack the edge there because it seems like all these companies are doing different things just better. So I see that being a huge problem for just department stores in general, long term, because it seems like they really lack that certain edge, that niche that all these other retailers now have found. But I had to be balanced. I had to find a tweet that was somewhat positive. So our first tweet says, I actually think Macy's will beat in sales and revenue. Online shopping has really taken over, and Macy's has done a decent job in that aspect. Now, of course, we know from looking at other retailers that online right now, e-commerce is key. So if they are able to master that, like this tweet thinks, that will, of course, be a really, really good thing for them. But, in terms of the department stores, like we're seeing on the screen with that chart, we've seen that huge dip and just unable to come back from that, which kind of brings me to our next tweet, which says, I'd personally love to see Amazon purchase Macy's instead of JCPenney, though. I think Macy's has a lot more upside than JCPenney, in my opinion. Now, to say Macy's has more upside than JCPenney isn't exactly saying much because Macy's did just file Chapter 11, and they announced yesterday that they're actually in a stalemate. They're unable to find a bidder, which means no one really wants to buy them. So, Kevin, I'm really curious on your department store and, of course, more importantly, Macy's outlook, because when I think of department stores, I think of malls, I think of crowds, and I honestly kind of think of germs. So a few things that it seems like I won't be wanting to be near anytime soon.
Listen, if you're Macy's and you're bragging about being better than JCPenney, that's like bragging that you're the summer school valedictorian, right? I mean, it really doesn't count. Doesn't make you good, right? So I think the recovery that has to do in Macy's, they have to find their identity. If you look at charts of some of the retailers that are doing well here, it's TJX is not doing very badly. A lot of these companies are doing okay here because they found their identity. Are you a discounter? Are you a full price? What are you exactly? So Macy's has capital that can keep them in business, and they're making changes like Jenny said. But is it too little too late, and are they burning through? Remember, there was a time when JCPenney had enough cash to get through. And so, JCPenney is just a long goodbye, and someone's going to buy the scraps of what they leave behind. The question is Macy's going to do that? So, the story's not great. They keep making adjustments, but the story is still not good for Macy's. They need to become a discount retailer to get back in the game here, guys.
Yeah, no, I think it's a great point. And a lot of things, too, you have to think about, Kevin, is, you talked about J.C. Penney's. I mean, just the building right here, right behind me, that used to be the Sears Tower. Sears doesn't exist anymore. And so it's not out of the realm of possibility for things to, go out of business. And this is the business that's struggling. And Jenny, hey, a lot for us to unpack and to think about here. So we appreciate you joining the show, and thanks for taking the time. Jenny Horn, TD Ameritrade Network contributor. As we say goodbye to Jenny, we want to welcome in Andy Swan, the co-founder of LikeFolio.com, to the program. Andy, we had a conversation not too long ago around Nordstrom's, and one of the things you pointed out was some of these companies, the Nordstroms, the Macy's, the Dillards, may be the only ones left standing on the other side of this, as so many of the smaller boutiques and things may collapse and have really no way of surviving this. Is that still a huge part of the story? And then the second part here, Andy, as we dive into the data, hey, a recovery doesn't need to be a snapback recovery. This has been a multi-year downtrend. Things can just stabilize, and that can be positive for Macy's. Are we starting to see any signs of that yet?
Yeah, I'd say stabilize is probably a pretty good term. We've got purchase intent mentions down, for the current quarter, the one that we're 1 month into, are down 7% year over year, which is actually an improvement for Macy's. I think that this entire conversation is really around whether Macy's can get over the very, very, very low bar that investors have set for them. So I think everybody's kind of on the same page here. This is a company that is, effectively falling apart. It's not the type of company you'd want to be in charge of at this point unless you had some miracle turnaround juice. I think it's more about expectations. I think expectations for Macy's are very low. The one thing, I'll say one thing that bothers us about Macy's, among many others that have already been talked about so far, is that consumer happiness for Macy's, where we're tracking, people's experience with the store and with buying with them, has really fallen off of a cliff over the last 3 months. So they're talking about this digital evolution of their business, which apparently is going pretty well by the numbers, by the sales. But when we dig into it, the execution's actually been pretty poor in terms of whether or not they're satisfying those customers. So there's reason to believe they're getting a lot of people through promotions and other activities, kind of onto the site and to click the buy button. But our data shows that they're not really thrilled with that experience at all. And that does not bode well for Macy's kind of omni-channel turnaround plan. And that's what concerns me the most. On the positive side, stocks seem to go up and up and up, and that's the only direction they want to go over the next little bit or the last few days. So that's good. Expectations are really low. That's good. But in terms of Macy's as a business, there's just so many things going wrong. Less customers, and even less of them are happy with the experience than before.
Yeah, Andy, you put out a lot of information there, and I believe three of us are sitting here on this show, and we all kind of feel the same way. Things are not good here, right. And the stock price reflects that things are not good here. And attrition has got a hold of this industry, and it's not going to let it go until there's very few left. And it's just a matter of time before some of these stores that are going to make it through are going to start feeding on the carcass of Macy's and selling their products, right? That multi-apparel brand idea that Macy's has. And, I used to be a fan of, well, Macy's has a bunch of capital. They own a bunch of real estate that they can convert and make it a long-term play. Well, we've been waiting a long time for this long-term play. And this pandemic probably couldn't come at a worse possible time. That being said, you've heard me say this on this show before. The bar's low, and I can see the ground from Macy's. That doesn't mean the ground isn't coming soon. Because even companies that have a lot of money and a lot of capital don't have it forever. So you guys are right. This is not a great story as it sits right now, guys.
Andy, real quick here. I mean, not to be a cynic, but one of the things that I kind of took away from your opening statements there was, is this potentially a situation where Macy's is doing anything they can to juice their near-term numbers so that maybe somebody comes in and buys what's left?
You know, that doesn't seem out of bounds to me based on what we see. I mean, the numbers are so bad in terms of consumer happiness. We actually did a qualitative, human eyes on 1,000 plus of these mentions, and the amount of people that are upset with their experience with the Macy's online ordering experience is extremely high, and it does make me think that they might be trying to promote their way. They might be so desperate that they might be trying to get uh, do whatever they can to send people to that digital channel so that they can have some glimmer of hope for someone else to look at and find to be the next shiny thing. I don't know that that'll work. The numbers for Macy's are incredibly bad. They're losing over $1 billion per quarter. That cash reserve doesn't last long when that's happening. So, for us, it's just one of those, why worry about this company? There's better retailers, Nordstrom being one that we talked about recently. There are better options out there for investors, I think. If you're a bottom fisher, I still think that there's other better options than Macy's. It just really disturbed me when I looked and saw that their little glimmer of hope, the digital channel, was absolutely bombarded with negativity and bad customer experiences. Tells me they weren't ready to go to the digital transition so quickly, but now they're kind of being forced to by the pandemic.